Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, it is a sharper fall than what we had seen in the morning. 103 points down on the Nifty. Midcaps are managing to be in the green, but they've also come up from the highs. So it looks like it is another day where there could be some consolidation or maybe some profit booking.
You're right. Last couple of trading sessions, what actually happened was the fact that the Bank Nifty outperformed quite significantly. Today, what's happening there is a bit of profit booking after two sessions of significant outperformance. So that is one of the reasons why the market has slipped lower today. But we have a lot lined up on this edition of Midcap Radar. First up, let's start off with the top headlines. Indices slipped to the day's lowest point after a strong open. IT and pharma are the big gainers, even as FMCG and financials dragged. Midcaps relatively outperformed better.
Midcap ID stocks like Persistent, Coforge, LTI Mindtree all gain on the back of Accenture's third quarter results. The company narrows its guidance for FY25 to 1.5 to 2.5% from 1 to 3% earlier, with strong growth in new bookings and increased adoption of AI raise hopes of a bottoming out for the sector.
Havells India jumps over 4% in trade on the back of a Jefferies note. The brokerage acknowledges Havells as a strong franchise, but keeps a whole rating with a target price of 1,800 rupees a share. Says the company's overall EBITDA margin will revive to 11% by FY26.
Aster DM climbs after 9.3% equity changes hands in a block deal window. Sources tell CNBC-TV18 that Olympus Capital Asia Investment is the likely seller.
And fertilizer stocks like Chambal, RCF and GNFCC profit booking after the strong recent run-up. Chambal Fertilizers also comes out of the F&O ban.
Okay, all right. Those are the top headlines. But the bigger headline is the fact that the market fall is a little steeper than what we had seen in the morning. 100 points gone on the Nifty right now. It's below that 23,500 mark. There was an attempt of recovery from the lows, but that also has been sold into slightly. Mid-caps, again, they are outperforming. They did see a dip in the red. It recovered from those levels. Now it's up around 84 points. So it's been quite volatile, even from the mid-cap angle, and it has come off sharply from the highs of the day as well. As Vivek was pointing out, banks are not doing well in trade today. They are not participating in any of the gains, but there's some support coming in from IT.
You're absolutely right. So what's actually happened is that the last couple of trading sessions, banks, some of the agrochem names, some of the fertilizer companies, sugar companies, all of them did very well. Today, seeing a bit of profit booking across all of those names. But this is our special segment, Midcap Movers, where Hormaz is standing at the wall to take us through the midcaps that are buzzing in the session today.
Well, it's slightly choppy as we speak, but the flows that might just reverse in the last hour of trade because of the FTSE inflows coming in. So we will wait out for the last 60 minutes of the trade. But as of now, the broader markets are still holding on to some bit of gains, but the Nifty is underperforming. Let's look at some of the top losers within the broader markets, and HPCL here is leading the pack. So remember, the stock is trading ex-bonus in today's trading session. Supreme Industries also not having a very good day. Cochin Shipyard, after a gravity-defying run, is seeing some bit of profit booking, and Bharat Dynamics also seeing at down 2.5%. Fertilizer stocks were the stars in the last few trading sessions, all of them gaining anywhere between 15 to 20% in a single day, all of them coming off in today's session ahead of the GST Council meet tomorrow. Chambal, GNFC, Deepak Fertilizers, RCF. In fact, RCF was in a 20% circuit yesterday, so some 5.5% lower there as well. A sector bucking the trend, though, is railways, and that is the sector that is shining bright. Even after the broader markets being a bit choppy, RailTel is up 11% now. RVNL and IRFC also seeing some bit of buying interest coming in. Some stocks doing well on the back of volumes, and Cera Sanitary, where he's among the toppers in that list, almost 9% higher on very strong volumes. Raymond off the day's high, but still 5% higher. VIP Industries is seeing a gain of 5% on strong volumes, as is Bayer Corp in today's trading session. And lastly, some stocks doing well on the back of positive brokerage commentary. We'll talk about them in the as the show goes on. PVR Inox, Havells, both gaining around 4.5% each. And First Source, where Nomura is neutral, but the management commentary is something that has pleased the street. So 3% higher there as well. Back to you guys.
Okay, we'll discuss about PVR Inox in greater detail as well. Thank you so much, Hormaz, for joining us as always. On the fertilizer pack as well, of course, it's the meeting is tomorrow in terms of GST rates. And the analysis suggests that it will not impact fertilizer stocks so much, even if there's a GST cut. So that's the word coming in from experts as well. So just keep those stocks on your radar as well. But it's a good time to get a technical check on the markets. Let's welcome Himen Kaparia of KR Choksi Securities for just that. Hemant, good afternoon. Thank you so much for joining us today. Well, do you think this profit booking or the consolidation that we are seeing, at least in the benchmarks, that will continue and it could be very stock specific from here on?
A very good afternoon to you, Sona. Thank you for having me on the show. It's always a pleasure. I think you're absolutely right. It seems more stock specific because obviously the Nifty is looking a bit tired. We spent almost 10 trading sessions tightly bunched, and today we're looking a bit heavy. The volatility index, Sonal, is also getting a bit oversold. So a bounce is underway. So the VIX goes up after such a big decline. Logic says the markets also need to cool off a bit. 23,656 and 23,400 has been the range for almost the last 18 or 20 hours, Sonal. And if 23,400 breaks, we haven't yet done that. But if 23,400 breaks, then I wouldn't be surprised if we see a 150 or a 200 point decline. Stock specific, yes, a lot of action. And if you were to correlate this to the bank Nifty Sonal, the levels, the setup is almost similar, obviously. You have a range between 51,934 and 51,200. So there's roughly a 700 point range coming in over here. If 51,200 breaks on it, then I think we see a similar decline. This doesn't change the trend or something, but yes, we've had a V-shaped recovery and we've had a very smart move. After that, the stagnation, you see the Nifty slowly bunched and going sideways and now down. So I'm not saying too much, but a small correction seems to be on the anvil. But the levels of 51,200, 23,400 haven't been broken yet, Sonal.
So 51,200 for the Bank Nifty and 23,400 for the Nifty are key levels as per you. Hemant, which are the individual stocks or what is it that you're recommending today?
I think a couple of stocks which look interesting. The first one is a buy call on Apollo Tyres, Vivek. High tops, high bottoms, about the 55-day exponential moving average, mechanical indicators giving a crossover buy. Everything seems to suggest that we are heading for a further upside in spite of a slightly stagnant or a wobbly market. So one can buy Apollo Tyres at 497, stop loss 482, target of 527, risk reward ratio 1:2. And the second stock is a sell on ABFRL. A small rounding top stock looks tired. We are just breaking down from a 7 trading session consolidation phase. Now on the hindsight, I can say it wasn't consolidation, probably a small distribution phase. So not too much. The long-term picture still seems positive, but now a small correction is underway. So one can sell ABFRL at 317, stop loss 327 and target 297.
Okay, all right. Thank you so much for joining us, Hemant, today. Have a great weekend. With that, we'll slip into a short break. When we come back, we'll connect with Rohan Gupta, the director of Nuvama Institutional Equities. We'll discuss what's happening in the specialty chemical space. Most of these stocks are buzzing, and we'll also discuss the trends in the agrochemical space. Stay tuned for that. Welcome back. You're still tuned into Midcap Radar. We spoke about PVR Inox and how it's buzzing in trade today in an otherwise weak market. It is higher after MK has written a note on it. They have maintained a buy rating on the stock and cited some reasons as well. Vamakshi is joining us now on our special segment Midcap Spotlight with all the details.
Well, absolutely, Zonal. When we look at PVR Inox, over the course of this year itself, the stock has underperformed, and MK says that the weak performance could be highlighted, on account of patchy box office performance over the last few quarters. Structural issues still persist, which includes a rapid adoption of OTT, as well as higher ticket and F&B prices. And they have highlighted that occupancy is unlikely to bounce back to pre-COVID levels. Even the first quarter is expected to be a dampener, with the IPL, T20 as well as the general elections being hurdles for some of the movie releases. The high fixed cost structure of the company is also impacting the profitability and has aggravated this issue. But as far as the future is concerned, over the medium term, they expect to see some respite. Movie pipeline is expected to improve going forward, and the company is also taking a lot of initiatives both on the revenue as well as cost front. They are trying to maximize profitability. Screen addition guidance is now looking more calibrated in their opinion. Loss-making screens are also being culled on a regular basis, and the company itself is transitioning to a capital-light model. Fruition of some of these efforts, however, is unlikely until the medium term. What they are saying is that all of these negatives are now priced in. The stock performance now hinges on the improvement in the box office collections. So overall, given all of these factors, they've gone ahead, given a buy rating on this counter and a target price of 1,650 per share.
Okay, all right. The specific stock aside, I think over the weekend it's a good time to hit a theatre and go for a movie as well. But jokes apart, let's talk about specialty chemicals and the agrochemical space. Nuvama says domestic demand environment is favourable for agrochem and intermediate manufacturers. Demand revival is led by firm crop prices along with government rural push. They also add freight costs, and the Red Sea crisis may put pressure on near-term margins. To discuss this and more, we have Rohan Gupta, Director at Nuvama Institutional Equities, joining us now. Rohan, good afternoon. Thank you so much for joining us. I wanted to understand what has exactly happened to excite this space so much, because managements have been commenting that this recovery will come by in the second half of FY25. Is there any incremental trigger? Do you think the recovery has come in faster than expected, and that's why some of these stocks are buzzing?
Yes, hi, good afternoon. Thanks for having me on the channel. So yes, I mean, first of all, what is changing in the sector is basically the outlook, because we are now coming more closer to the recovery. I don't think that there has been a significant change in the commentaries of the management, and even as an analyst, we have been expecting that there will be sequential recovery, which should be in place already. And Q4 results have been broadly in line with the analyst estimates. I think that the Q1, Q2 also will mark a sequential growth, adjusting for the high base in Q4. So apart from that, I think that the sequential growth is already in place. Most of the agrochemical companies, the global environment is likely to improve in the second half. But yes, the things and visibility is now only just getting better. That's what I think the stocks are pricing. That is number one. Second, in agrochemicals, especially in domestic agrochemicals, intermediate manufacturer, I believe, are likely to benefit in the near term, because there is a vessel availability crisis in China. The freight rates have gone up almost 4x to 5x. That is definitely going to help some of the domestic agrochemicals intermediate manufacturers. That is a short-term idea, probably over the next 3 months to 6 months. I think that these are the players probably which are rightly placed to benefit from this scenario.
Rohan, just to step back a little bit, could you give us a sense, or could you give us a breakup as to how is the Indian domestic market playing out, and how is it that exports are placed? So far the worry was that the inventory was still quite high as far as export markets were concerned. So are you now seeing a certain amount of recovery over there as well?
So as far as domestic agrochemicals markets is concerned, that the view was already positive, because initial estimates of IMD and other forecast agencies forecast was favorable for the good monsoon this year. So far now that is holding on, and that we are expecting even with the supported by the government rural push, domestic formulation companies are likely to do well. That's where we remain positive on the companies like maybe Dhanuka, Insecticide India. These are the players who are likely to do well in the domestic agrochemicals. As far as the exports markets are concerned, I think that especially companies focusing on agrochemicals for the exports market, they will see a recovery more importantly in second half. However, as I mentioned, there's sequential recovery in place. I mean, the numbers will be on every quarter should get better, but large part of the growth should be coming in the second half. Companies which are not primarily dependent on agrochemicals for their exports, companies like Gujarat Fluoro, Aarti Industries, Galaxy Surfactants, these are the players who are not completely dependent on agrochemicals. In my view, they should be continuously growing on every quarter, even from the Q1 itself. And that's where we are more positive on the names like Gujarat Fluoro, Aarti Industries, Galaxy Surfactants, which are primarily focusing on FMCG or consumption-led business model.
Got it. So when you talk about consumption-led business model and some of the stocks which could cater to that, the recovery that we are seeing, is it demand-led or there's some pricing recovery as well that we are seeing? And if there is pricing recovery, so what happens to commodity chemical names, say Tata Chemicals, because they have been under pressure as well?
So what we have been maintaining that prices for most of the either commodities or specialty chemicals have bottomed out in month of August, September, and since then they have been stabilized. There was a concern that once China, after the New Year come up, in month of maybe March, April, the prices may again go down. So far now, it has not happened. So prices are still holding on, and on the contrary, in some of the chemical prices, there is a uptick of maybe 5% to 10%. So the bigger worry was that after September, October, people were expecting that once China come back after the New Year opening in month of March, like how they did last year, they dumped the commodities, they dumped the prices. So far now, that has not happened, and I think that is a good news for the sector. We have been maintaining that there is no further room for any price cuts emerging from China, and that prices are still holding on. Now, the recovery which we are talking about, it will be all across. First of all, global inventories level are drying down, number one. Second, we are also seeing that re-inventorization has also started happening up to in some pockets, and a little bit of the price increases. So the recovery is not only driven by any one thing; it's across the drivers of the growth which are going to play out.
Okay, thank you so much, Rohan. We have a lot more questions, but today we are running out of time. With that, let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Welcome back to Midcap Radar. The beauty arm of retail major Shoppers Stop has launched Giorgio Armani in India, starting with fragrances and makeup. The company is also set to launch Prada and Valentino's makeup lines in India. My colleague Shilpa Ranipeta caught up with Biju Kasim, the CEO of the beauty business at Shoppers Stop, to discuss the launch of these luxury brands and the company's foray into Tier 2 and Tier 3 markets. Listen in.
Armani has got a beautiful portfolio of lines from men's and women's products. Makeup is going to be launched because the process is on. We are in the process of registration, which means that within the maximum about 2 months we should have it on the shelves. And the boutiques should be ready in about 4 months. Why you say 4 months? It's just that we are just finalizing the formalities. And obviously the design and things are being worked around. So normally it takes 90 days to 120 days to have the boutique well done.
I want to talk about SS Beauty overall. You know, last quarter it was the growth driver for Shoppers Stop. If you could sort of run us through how the performance has been so far. Are we expecting it to outpace Shoppers Stop growth again? Sort of can quantify the kind of growth that we've seen for the beauty business?
Beauty within Shoppers Stop did fairly well. This is a journey that we have seen in the last 2 years. Last year also we had very strong growths. This quarter as well we see positive and strong growths. Overall there was a bit of a softness for the category. This was largely due to factors that were not really in our control, whether it is a bit of a heat wave that was there due to the elections and so on and so forth. But we see that the numbers are coming back very, very strongly. Right. Beauty has been growing ahead of the company, and we see the similar trend continuing at this point.
Right. And what about store expansion for this fiscal? How many are we looking at? Store-in-store also, and exclusive SS Beauty stores as well?
So for Shoppers Stop, we had one of the maximum number of openings last year. This is going to continue this year. So which is the box, which is actually the department store, and we are also venturing into Tier 2 and Tier 3 cities, because this is where consumers are really eager to indulge.
So we did NARS, now we're doing Giorgio Armani. What other luxury global brands can we expect you to bring going forward?
So at this point, I could only talk about what we have signed. Okay. So Giorgio Armani makeup is going to come in, and we will soon have a Prada makeup, which will also be followed up with Valentino makeup. Okay. So these are 2 large projects that are in the pipeline, which should come to the market in the next 4 months to 5 months. So these are 2 large exciting projects that we are working on at this point in time.
Well, a very interesting conversation with Shoppers Stop bringing in new makeup lines in India. But one particular event that will happen in the second half or in the last hour of today's trading session will be the adjustments that will happen due to the inclusions that certain recent listings will see as far as the FTSE All Cap as well as the All World indices are concerned. Along with that, certain existing stocks within the FTSE indices will also see weight changes. Now, which are the stocks that are going into the FTSE this time around? Quite a few recent listings, so names like Tata Tech, JSW Infra, IREDA, Stellar World, Hanasa, all of them come into the FTSE All World All Cap indices. All of them will see flows today from passive funds in the last half hour of the trading session. Along with that, remember, Sensex will have a new look when it comes to Monday. Adani Ports comes into the Sensex at the expense of Wipro. That adjustment too will be taking place in today's trading session. But that's all the time we have on this edition of Midcap Radar. Your stocks when we return.